Everyone, just wanted to say great job in week 11. Really challenging material. Everyone put forth a really strong effort. Great showing. A lot of great discussions in the classroom. Really a lot of great work. Keep the momentum going. Proud of everyone's effort um, and enthusiasm. Got to say that. It hasn't been easy, but everybody's made it this far. And you should be proud of that as well, of your accomplishments. Now, what I did want to do is take a minute and look at one of the problems that there seem to be quite a few questions on. And I think that was P11 1A. Let me see. No, it's P11 2A. P11 2A, and it is this portion. This is portion C. Portion C. And with portion C, we're looking not at the balance sheet as a whole. This is a partial balance sheet. We're looking at the stockholders' equity, and we're really recording what's happening with the treasury stock. So let's read it. So Fetcher Fector Corporation, had the following stockholders' equity accounts on January 1st, 2015. So they had common stock, $5 par. So that's $500,000. Paid in capital in excess of par. Common stock was $200,000. They had retained earnings of $100,000. And in 2015, the company had the following treasury stock transactions. So on March 1st, they purchased 5,000 shares at $8 a share. June 1st, they sold 1,000 shares at $12 per share. Then September 1st, they sold 2,000 shares at $10 per share. And December 1st, they sold 1,000 shares at $7 per share. Now, Fector Corporation, they used the cost method of accounting for treasury stock. And in 2015, the company reported a net income of $30,000. So we're asked to prepare the stockholders' equity section for Fector Corporation at December 31st, 2015. Now, it does tell us treasury stock is $8,000. Then it tells us what the total stockholders' equity should be, and that should be $829,000. So let's take a look at this. Don't mind my typing. Let's put in the paid in capital. We've got what? Capital stock at $5 par, right? So the par value is $5 par, and there were 100,000 shares issued, and then we've got 99,000 outstanding. So we got 99. Let's do this. 99,000 shares outstanding, right? We've got 99,000 shares outstanding. So that leaves us with the we've got the total additional paid in capital. We've got 500,000. So we got 500,000 there. And then there it is. So let's look at the additional paid in capital. So we got additional paid in capital. And we've got in excess of par. We've got the 200,000, and it gives us this. We're told this. We've got the 200,000, and then we've got from the treasury stock. We've got, let's see here. We've got 7,000. And so our total additional paid in capital So we got our paid-in capital, and then we've got our total additional paid-in capital. Total additional capital that's 207,000, right? So let me just put this. We can total pay. We can. So we got the paid-in capital here. So we got paid-in capital, total additional paid-in capital. So we'll put this as the total. So we got the total paid-in capital. So that is what, 707,000. So that's our total paid-in capital. That's everything coming in. Total paid-in capital. We've got 707,000. Now let's take a look at. We need our retained earnings. Retained earnings. So it tells us here that the retained earnings, we have 100,000 of retained earnings, but we also have 30,000 of net income. So for what's that, for 2015? So that gives us 130,000 of retained earnings. So we've got a total, let's put this here, our total paid in capital and retained earnings, because we're adding that net income in there to the retained earnings balance that we already had. So that gave us that 130,000. So we've got a total paid in capital and retained earnings. So we add the two up. So that gives us 837,000. Right. So okay, that's right. So that's our total paid in capital and retained earnings. Now we've got to take account for that treasury stock. So we've got less. I'm going to take less this treasury stock, right? We're going to take less the treasury stock, and that was 1,000 shares. So we got 1,000 shares, and so that will be minus 8,000. So remember, they purchased a total of 5,000 shares at $8 a share. Now, between June 1st and December 1st, they sold 4,000. So we've got 1,000 of those shares left over. That gives us that 8,000 number for the treasury stock. And it's even a given. So they give us that on the side of the chapter. It tells us that. So now let's look at what our total, put that in caps, sorry. Total, oh, I got caps lock on, sorry. So our total stockholders equity is going to be that difference, which is 829,000. So that's $829,000, which is our total stockholders equity section of the balance sheet for December 31st, 2015. That matches up with what we have. So this is how we do it. Really, we're just keeping account of the treasury stock transactions. So otherwise, if you have any questions, let me know. Great work. Keep it going. Keep the momentum going. We're getting close to the end. Make sure to keep working hard, and thank you again.